Hi everyone, and welcome to Boothy's Bites, the monthly video series where I interview Lydian CEO Mr. Chris Booth as he runs us through the RBA announcements, market movements, lender rates, and more. So of course we can't do this without him. So welcome, Boothy.
Hi Jackie, how you doing? All right, thank you.
I'm good. So first up, the RBA. The most recent meeting was April 1st, which just so happened to be April Fool's Day. Was there any laughing coming out of that meeting? Any laughter?
Ho ho ho. Yeah, so look, we've kind of got a bit of a funny environment right now. So, look, I don't need to kind of go through it in detail, but let's just sort of map out the landscape. One, we've got the RBA talking about the inflation in the system, which is now, we've got that inflation under control and it's within the comfortable band between 2 and 3% for the RBA now to look at other elements of the economy which they've got to sort of manage and monitor. So that's a good thing. So all of that work that's been done is pretty huge, and that really predicated the first cut which we got back in February, which is cool. The second part of this is now we've got this really volatile market in the US with President Trump and the tariff conversations and really just the volatility in general regarding those policies from an international perspective which he is implementing. Now, whether they go ahead or don't go ahead, we'll still wait and see, but certainly it creates a lot of confusion, and again, when there's confusion, there's kind of concerns, and certainly the rhetoric now from many of the economists is that the RBA will cut an interest rate, our cash rates again next month, which is quite interesting because previously, the commentary has been sort of a little bit more passive and reserved. So that for us is very positive, and in fact, ANZ said they're potentially cut by 50 basis points. Now, that was a bit of a knee-jerk reaction to the initial tariff conversations, and some of those tariffs are sort of now being kind of wound back, and there's negotiations in those. The other thing that's happening as well, which is really, I suppose, as a back burner and concern, is the elections. So we've got, we're going to the elections and the polls in early May, and we've had a lot of those policies or the conversations around changes in policies to help homeowners. Obviously, it's a big thing, and it's a big voting ticket, and both parties are looking to really stimulate benefits associated with helping people buy that first home. Now, how they'll afford it, that's a different conversation, but certainly, if they implement what they're talking about, it is going to further fuel that ability to buy homes, and therefore, potentially we'll start to see a lot more property activity, prices in property increasing as demand is increasing and things as well. So there's another element to the market there. And then lastly, we've kind of got a little bit of an update from APRA with regards their concerns regarding affordability, which was interesting. So sort of through the COVID period, they increased the additional interest costs associated with demonstrating affordability, which went up to 3.25. Now, in the old days, it was like a 1.5% buffer rather than the 3.25% buffer. So APRA are considering to reduce that buffer potentially down to 2%, which is going to make a big difference specifically to the banks with affordability, and potentially that affordability increases by sort of 15-20% for the average borrower as well. So you can see there's a real melting pot of information coming to us right now, which will impact borrowing, property, and lending. So watch this space. It's exciting.
Absolutely. And so what's the latest with lender interest rates?
We've had a couple of the non-banks give us some really good sort of discounted rates. So some of those lenders, we're looking at their MoveBank, MyState. So they're sort of some of our second tier lenders, and typically they're very transparent with their rates as well. So if you do want a better interest rate with a major lender, well, then we have to go into bat for you and negotiate. We're getting some really good value out of negotiating for higher dollar loans, low loan to value ratio with the majors as well, and getting some big discounts there. So do reach out. The other thing which is interesting, because all of this volatility in the markets, that has impacted the interest rate markets as well. So not talking about the cash rate, we're talking about where the forecast of interest rates are for the future, and those future interest rates have fallen quite dramatically over the last sort of 3-4 weeks. So what that's meaning is that the banks now have got the ability to reprice their fixed rates a little bit lower. And Macquarie Bank, would you bet against them? I don't know, but they've got some really nice 2 and 3 year fixed rates now, which are quite heavily reduced as well. So down at 5.39% for 2 and 3 year fixed for owner occ P&I. And again, you can see here that this sentiment, with the volatility in the economy, is allowing some of the banks to participate in different areas of the marketplace. So again, it's well worth the time. It's well worth to get in for a review with your broker, have a look at your existing rates, fight for better rates, and also look potentially at fixed rates. I'm not suggesting fixed, but certainly having a conversation where rates are is a good thing, yeah?
Absolutely. Now, Lydian has increased its service offering for 2025. Can you talk us through those new services?
I mean, it's interesting. So she's grown up a little bit, has Lydian. The pride is growing up, and whereby that we were traditionally all things to everyone. There is certainly within the team now some specialisation and some genuine niches of service and types of clients that we wish to help. Hence, going to market with a few different brands. So for us, the mums and dads home loans and investment home loans, very vanilla, and we'll always be working with those clients, and that's pretty straightforward. And all of our brokers are experts in dealing with that. Where some of these niches apply are things like small business owners and business lending in general. So we have separated our Lydian asset division, which is basically looking after those small business owners for equipment finance, car finance, potentially some small business lending as well, which we feel when we're going out to market with some of our accounting partners, that will benefit some of the services outside of the traditional home lending that we do. The second one, which we're really proud to launch, is I suppose our high net wealth individual sector, or our sort of family office relationships. This is certainly not for everyone, but Lydian Private is our new brand for that market. We've got a really great team. We're going to launch that brand, and what that means is that we're able to look after some of the the more wealthy clients in our marketplace when they're looking at some larger homes, larger debt, and also where we source the funds for those clients is very different, because we typically have to go to private banks or alternate lenders to support clients who are very, very wealthy, and just the credit is a lot different. So it's a specialized service for those types of clients, ran by a specialist team as well. So that's another introduction to the crew as well. And then lastly, a lot of our partners are financial planners, right? And there's no doubt about it, within our team we've actually supported some of our clients' businesses to borrow money to purchase their next business, or buy businesses to integrate into their business. So financial planning lending, we do have basically our practice finance division now, and again we've got a specialist who's an ex-banker in that space who specialised in looking after professionals for many years. We're going to launch the practice finance division of Lydian as well. So again, you can see it's niche, it's kind of bespoke, and we've got people to provide those services as well who are very, very experienced. So yeah, well done, Lydian.
Well done, Lydian. That's amazing. And you're so right. It's like the little lion cub is really growing up and taking control of the pride.
Very true, very true. Different cubs this time, that's right.
Yeah. And so what's the latest with our partners and the communication systems that we've been implementing? Obviously, 𝐒𝐢𝐻𝐸 is a huge communication system there, but what else are we adding to the mix?
Yeah, so and that's been great. So 𝐒𝐲𝐸's really putting a stake in the ground. So our go to market with being a professional services partner of financial planners is really important to us. We've got lots of existing partners in the financial planning industry who have continually supported Lydian in her growth and referred clients. What we want to be is better. So, and I think there's a few points of that. Number one, certainly when we sort of introduce to a client, obviously we can do the work around the lending that we're and execute on the strategy of the advisors. That's not what we're talking about here. Really, what we want to do is provide a little bit more education on going to the partners about what's happening in our world, and potentially email's not the right way to do that. And secondly, some regular communication outside of telephone and email I think is important. You and I know that the way we communicate these days and absorb communication, it has to be on our time. So yeah, we've opened up our dedicated Teams hubs for our partners, and within that we'll start contributing some content, and that'll be video, some marketing content. We'll be sharing updates, progress with clients. We'll also be sharing updates with interest rates and things like that. So we want to have this ecosystem where we can communicate with our partners much, much better. And hopefully, what that will allow them to do is to see some of the extra services and the extra client outcomes that we've had for potentially other partners, which would be applicable to their clients as well. So, we just want to improve the service, and Roxy's done a great job in really bringing this to life. So over the next month, please get involved in your Teams chats. If you can't get in, come and reach out and we'll get you in. But there's some really cool stuff in there right now to participate with. So yeah, dead excited.
Amazing. Bring it on. Well, Boothy, thank you so much for your time. Thank you to everyone for watching this. And we'll be back next month, won't we, Boothy? More updates.
We will, hopefully potentially with a rate cut coming. So yeah, be exciting. But thanks again, Jackie. We'll see you soon. Ciao, ciao.
See you soon. Bye.